morning on a calm day in the Asian markets. Welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah.
Good morning, Neeraj. I'm Meera Dugal. You're watching Indian Open, and these are our headlines. Infosys files a settlement plea with SEBI over the severance package for former CFO Rajiv Bansal. The company admits that it failed to disclose details of the severance agreement as required. Cipla is unfazed by the regulatory hurdles faced by its peers in the United States. CEO Umang Vohra tells Bloomberg Quint that he expects a quarter of the pharma company's sales to come from the US in the next 3 to 5 years. Message to banks from the RBI governor: shape up, get slim and trim before we don't want recapitalization to sow the seeds of the next crisis. Donald Trump recognizes Jerusalem as Israel's capital, says the U.S. embassy will be shifted from Tel Aviv despite warnings from world leaders that the move could undermine peace efforts in the region.
Well, I heard in the Bloomberg Quint podcast that even the United Nations has denounced the move as well, and certain world leaders from non-Middle East countries like France have also spoken up about this. So this should be a very interesting political/geopolitical event that people would be watching out for, not just today, I think over the course of the next few days. I expect some developments thereof. However, the trade setup, and what are we looking at? We're looking at a start in the green, marginally in the green, if you will. Nikkei is up 1%, but the rest of the markets, including the XDS Nifty, showing that we'll probably start off flattish to marginally in the positive. But it's important to note that what happened yesterday, or what's been happening over the last few days, the last 1 month, if you will, India is not isolated in this correction. I just took a look at what's happened to the other Asian markets over the last 1 month, and the corrections have been similar. So Nikkei, never mind today's move, is off about 5.5% from the 1 month highs. Hang Seng about 6.3% from 1 month highs. Kospi about 3%. And all of these are indices that have gained anywhere between 15 to 25% over the course of this year, similar to the Nifty. So our markets have moved exactly in line with what the other Asian markets have moved, and they're correcting right now almost in the same line that the other Asian markets are correcting as well. So while we are looking in our own backyard as to whether it's our markets have specific reasons for fall, that may not be the case. It could well be just what's happening across the world in the Asian markets as well. But some key moving averages to watch out for, and Yatin will elaborate a lot more on this, but just a couple of points. The Nifty is below the 100-day moving average. It's down about 4% in a month, but below the 100-day moving average quite convincingly in trade yesterday. And the Nifty Bank is below the 50-day moving average and about 139 points, just a mere 139 points on that base of 25,000 from the 100-day moving average as well. So do watch out for these two indices. These could be very, very interesting to monitor as well. And we'll tell you why these are important a bit later on in the show as well. Also, if you just look at what's happening across the broader end of the spectrum, there is distribution. You can see that active traders are booking profits in stocks which had run up into certain NBFCs, etc. And that's the nature of distribution that we see in the markets. I mean, just look at what happened in trade yesterday. I've chosen specifically 2 or 3 stocks which are not F&O necessarily, but these have run up quite a bit, and you can see evident signs of profit booking here. There was no reason for Shankara Building Products, for example, to fall 10% intraday. There was no news there. It's just profit booking that is coming in and distribution that we're seeing. So Shankara Building 15%, Radico Khaitan corrected about 7-8%. This is the second time in the last 8 odd sessions that this one is doing that. Lao Pala, a stock that has gone up quite substantially, corrected as well. So some bit of profit booking that is creeping in into stocks that had moved up as well. There are a bunch of stocks to watch out for today, but I dare say watch out for IRB Infra. This is an important one from today's session perspective, simply because CBI has filed a charge sheet against the company, promoter, and few officials in the land grabbing case. Now, remember, when a similar instance had happened in the past, in May 2012, while the CBI shut the case on 3rd May, from a period of 1st May 2012 to about 11th May 2012, IRB Infra corrected 30%, nearly 30%, but 30% fall on that stock is quite strong. I'm not saying that is what will happen this time around as well. The management has had a con call yesterday with brokerages, and they have said that the charges are baseless and they will move on to the higher judicially options available to it. But just keep this in mind that the chart sheet has been filed, and brokerages by and large have come out with the verdict today. HSBC, for example, one of the notes that I saw, has downgraded the stock. No fundamental reasons, but because of this overhang, they have said that they are cutting the target price to 200 rupees. So a bunch of brokerages will probably tell their clients to move out of the stock, never mind what the fundamentals might look like. That could well be the position that brokerages take on the stock today. So be very careful. Don't be, it might be difficult or it might be wrong to catch a falling knife. There are a clutch of other names as well in terms of stocks in news, but I think this one took center stage today. That's why dwelling some more time on this.
All right, a series of legal problems actually over the years for those promoters. But we'll talk more about that later. Let's tell you what's coming up on First Word, our editorial picks for the morning. The Nifty shut below its 100-day moving average on Wednesday. We take a look at stocks that took the benchmark index lower and the ones that have helped to defend key levels. Lupin's in focus. Promoters have been hiking their stake in the company over the past 20 days or so from the open markets. We'll tell you what that suggests. The Reserve Bank of India, we've talked enough about it this week, but one last chart to highlight, and that is that the great Indian consumer is not looking all that optimistic anymore. And global, the big story there continues to be Jerusalem. What are the possible ramifications of Donald Trump's decision to recognize Jerusalem as Israel's capital?
But firstly, let's bring up the index. I was referring to that 10,000 DMA. Yatin pointed this out yesterday to me during the market hours, that we've just about managed to defend, or well, you can argue that it's either defended or just breached that 10,000 mark. Yes, we've defended the 10,000 mark, but it did fall below the key moving averages. So what are the stocks that have helped defend the index and stay above that mark? And what are the stocks that have contributed to this fall? Yatin is here, and he's put together the list of almost all the big Nifty 50 movers. Yatin, good morning.
Good morning, Neeraj. And, 100-day moving average, 10,000 on the Nifty. Clearly these are some psychological, technical levels which the market surely will be followed. But some interesting data points in terms of sectoral trends, in terms of stock-specific action. And clearly at this point in time, the Bloomberg data throws that the Nifty current level is close to 10,044. However, it closed below its 100-day moving average of 10,071. So clearly at this point in time, we are trading below that 100-day moving average. Usually in the past 2-3 months, we have seen that we have usually taken support near that 10,100, 10,150 level. And, we have closed below that. Market participants are slightly, wary of this point, that probably from here on, since we have Gujarat elections looming, any negative surprise could take the market much lower. Now, if you look at the stocks below 100-day moving average, and the heat map will come in, we have Lupin, UPL, Bosch, Aurobindo, Yes Bank, and mind you, all of these stocks are down from the 100-day moving average anywhere between 20 to 10%. So clearly, all of these stocks have been quite weak. Stocks which are very close to the 100-day moving average taking support there, and we have the entire private sector banking there. So Kotak Bank, IndusInd Bank, HDFC Bank, all of these stocks are trading very, very close to that 100-day moving average, and stocks above 100-day moving average. And clearly we have big boy Reliance Industries, SBI and Airtel. These are the three stocks in the index which are quite heavy on their weights on the index, have been much above their 100-day moving average. Talking about the financials, and remember, we have the financial services space, which has almost a 36% weight on the Nifty. And look at how financials have panned out. And by financials, I mean banking, the sorts of Bajaj Finance, the likes of Indiabulls Financial Services. Six stocks out of the 10 stocks are below their 100-day moving average. 2 stocks are very close to their 100-day moving average, and 2 stocks are only above the 100-day moving average, which is basically SBI and Axis Bank. And these 2 banks are purely led by the recent development and news flows. But if you look at 80% of the financial stocks, which form close to 30%, 25 to 30% of weight, are below that 100-day moving average or close to 100-day moving average. In terms of sectoral trends, something interesting for pharma, we have all the pharma stocks, but for Cipla, which is trading substantially below the 100-day moving average. All PSU oil marketing companies are below their 100-day moving average. Half of the auto stocks are looking quite weak, especially the likes of Tata Motors. And, on the positive side, ex-Wipro, all the IT stocks have seen gaining and are trading above that 100-day moving average. So clearly, to conclude, most of the sectoral indices, especially the bank Nifty and the private banking space, is seeing some selling pressure. And mind you, these are all FI heavy counters, so clearly indicates you the kind of flows that we are looking at as far as all of these financial services stocks are concerned. And finally, we have the Nifty heavyweights, and I have arranged this according to the weights on the Nifty. HDFC Bank, having a weight of close to 9.6%, is trading above the 100-day moving average. Similar is the case with the Reliance and ICICI Bank. But look at these two. HDFC and ITC carry substantial amount of weight, close to 12%, and these two stocks are below that 100-day moving average. And especially HDFC, in the last 5-7 sessions, one of the highest FII holding concentration, is seeing much below the 100-day moving average. So clearly, at this point in time, what we can make out is that the weakness that we are seeing in the market is led due to the selling that we are looking at in financials, oil marketing companies, and pharmaceutical stocks.
Thanks a lot for that. I think less people think that we are chartists. We are not. But the idea is out here to show you that some of the key heavyweights are trading at levels which could trigger some technical corrections into these stocks as well. I just thought I'll just bring up this one last chart and whether, this is the Nifty since September 2016. And the only time that the index broke the 50 and the 100-day moving averages was in November. It took support at the 200-day moving average. After that, the Nifty is not broken the 200-day moving average, not even had to dip to those 200-day moving averages. The reason I bring this up is because, guys, the 200-day moving average is close to 9,650 odd levels. So should these levels, the 50 and the 100-day moving averages and the 100 DMA, be decisively broken, then technical chartists would probably believe that the next support is only all the way down to 9650. Not saying we'll go there, but that is what the moving averages and chartists who follow the moving averages will be keeping at the back of their mind. However, that's not all that is in news. The bunch of other newsmakers, one of them is pharma, of course. Promoters closest to all the action and know what's working or not working for the company. And when a promoter of a large cap company like Lupin starts buying its own shares every day, there is reason to take notice. As per the Bombay Stock Exchange notice, Lupin promoters have bought 8.5 lakh shares from the open market in the last 20 days. Darshan joins us with what the possible reasons could be. Darshan, take us through the valuations and the fundamentals of the drug maker.
See, Neeraj, if you're looking at Lupin itself, and the data is very interesting because this is public information that this comes on the Bombay Stock Exchange and we've been following it. For the past 17 days, that's starting from November 13th, Lupin promoters have been buying every day. Almost 50,000 shares is what they buy. And overall, if you take a look at what they started in November 13th, right up to yesterday, they have accumulated almost 8.5 lakh shares. So that is something that, is very interesting because the counter has been actually beaten out of proportion, and in the last 17-18 days the promoters have bought in almost 8.5 lakh shares in the company. Now the stock is trading at record lows. The counter has fallen almost 50 to 60%. So let's take a look at what has happened. Now this is the Bloomberg chart, and this gives an indication of where the promoters have bought in. So this is, they initially bought it in July and August, and now look at this concentration. So in November, significant amount of contribution has come in. The later half is not yet updated. So over the next few days, you will see more green dots like this there also, where promoters are buying. So this is what exactly is happening as far as Lupin is concerned. Now, if you're looking at the stock price, look at the stock price. It's down almost 46% on a year-to-date basis, and trading at record lows. So probably the promoters now believe, and they are the deepest insiders of the company because they know what's going on. They believe that there could be substantial or there could be limited downside to the counter going ahead. So probably that is where in November, mid-November to December, they have started accumulating the stocks of Lupin. Now, if you're looking at the market cap, a significant amount of erosion has happened. Lupin was the second largest pharma market cap in India with a market cap of 90,000 crores. Now it has moved below Cipla, Cadila, Aurobindo Pharma and Dr. Reddy, and now becomes the 6th largest company in India, and Sun Pharma is the biggest one now. So the peak market cap is 91,000 crores. Now it is only at 36,600 crores. That is what exactly has happened with Lupin. Now, if you're looking at valuations, it's not the most expensive. It's the second least expensive stock among the large cap pharma counters, trading at 17.5 times next year earning. Counters like Cipla and Sun Pharma are still on the higher end. Aurobindo is the only one which is lower than Lupin at this point of time. So valuation wise, it seems attractive to most of the brokerage. Now look at the brokerage. What had happened in May is 70% of the analysts had a buy recommendation on Lupin, and now look at where that is. That has moved down to just 40% which recommend a buy, and the maximum that has happened is most of the analysts are recommending a hold. So the 20% hold that was there has moved to levels of 41%, and the number of people recommending a sell on Lupin has moved from 9% to 20%. So clearly fundamentals have deteriorated for Lupin, and the analyst community also is not the most positive on Lupin at this point of time. These are the three that are the most bearish on Lupin: Equarius, Jefferies, and SBI Cap. So even if you look at the worst target price that has been given, there is still only a downside of 100 rupees for Lupin. So probably the street also believes that the downside probably could be limited for Lupin at this point of time. Now, the other factors that you have to watch out, the big concerns for Lupin. First of all, loss of market share in key drugs like Glumets and Fortimet, and that started the entire fall. The big fall came in November, where it fell 20%. Warning letter, a combined warning letter at Goa and Indore, and that will dent the new approvals that will come in for Lupin. Pricing pressure will continue in the US markets. The management was not very confident as far as the commentary was concerned post the earnings. They believe that pressure will continue. And finally, no turnaround in the US subsidiary Gavis ever since they acquired it. So these are the four big concerns that the street has with Lupin. On the positive side, if you're looking at all the analyst notes that have come out and what the management say, there are no data integrity concerns in the warning letter. So escalation might happen, and that probably the management may believe. The management looks for site transfer for the new launches. So even though there are issues for the plant, they may actually have it. Valuations are attractive, and the return ratios are extremely strong with Lupin, more than 20% on ROA, ROC, and ROE. And finally, the company is focusing on complex generics and specialty drugs to overcome the issues that are there as far as the generic pricing is concerned. So overall, if you're looking at the big scenario that's happened, very interesting comments coming in from very interesting developments happening for Lupin. 8.5 lakh shares is worth 70 crores, nothing compared to what they already own. But when the promoters themselves keep on buying shares every day, probably it's a sign that the bottom is coming, or they believe that the worst is over for the company.
All right, thanks so much for that, Darshan. That's Lupin for you. We're moving away from individual stocks into the macro. I know we've had a macro-heavy week, but I'll just take a couple of minutes to make 2 points. One is what we headlined, and that's not exactly there in our sort of planned discussion, but a lot of people have taken note of the RBI governor's comments on PSU banks, the fact that there will be a whole host of reform measures that will go along with the recapitalization package. I think that has been the talking point more than the policy, and I think this morning Neelkant Mishra had a note out, and he talks about the fact that he's overweight PSU banks now, and SBI is one of his top perform ideas. But that...
We call it the slim and trim package.
Yeah, I mean, for a governor who's not known to be the best with words, I think that was well put.
For a governor who doesn't speak much, let's put it that way.
Yes.
I thought that, it was well put.
It was very well put. I think
it'll go down in history as the slim and trim package.
Yes, and everybody has taken note of that message, which is why I just wanted to put that out. But the other thing I wanted to put out, and this didn't come in the policy, this comes in the forward-looking surveys that the RBI tends to put out the evening after the policy. There's a worrying chart. The great Indian consumer is not looking particularly upbeat. If you look at that chart on your screen, that's the consumer confidence index. The red line is showing you what the conditions look like right now and what the mood of the Indian consumer right now is, and it clearly shows that it's been in negative territory for a while, as the red depicts, but it has been steadily declining. And if you look at the change between the September and the November months, there has been a significant decline in that index from around 95.5 to 91.1. The index levels are not important. It is the decline decline in consumer confidence that is showing up. Even the 1 year ahead, the future expectations index has been declining. That is still an optimistic zone, which is why the blue line, but that too has been declining. And if you look at the breakup of where this, sort of worry on the consumer confidence side is coming, or why Indian consumers are looking less confident, it is all about employment. So the breakup will show you that the employment index, the negative perception is now at 19.2. It's been steadily getting more and more negative, and even 1 year ahead expectations, while positive, are the extent of positivity is declining. That's a little bit worrying. That employment feeds into the overall economic situations index, and the consumer is not looking particularly upbeat about that. We saw already some decline in the growth in sort of consumer expenditure in the GVA data, and if this correlates, not a good sign. We need the Indian consumer to hold up, because they provide the end demand for that investment cycle, which has to pick up at some point.
And they've been the one pillar that has been holding up this
100%.
economy over the last 2.5 years, right? Look, we started the chant in the beginning of the year, where are the jobs?
We did.
Asking Finance Minister Arun Jaitley to hopefully address that shortcoming in the budget. And I suppose we will continue that chant into the next budget, saying, where are the jobs? Because that really is the underlying fear across the economy, that the job situation is looking grimmer, every week.
Wage growth is not as much as people would have anticipated. Jobs perhaps not as much as people would have anticipated. So yeah, I think it's a problem for the economy.
And not all of it can be ascribed to higher productivity in that sense, or technology, or any of those things. Okay, from the macro to the global, President Donald Trump recognized Jerusalem as Israel's capital. This happened late last night. He said he would begin moving the U.S. embassy there. Listen into what he had to say.
After more than 2 decades of waivers, we are no closer to a lasting peace agreement between Israel and the Palestinians. It would be folly to assume that repeating the exact same formula would now produce a different or better result. Therefore, I have determined that it is time to officially recognize Jerusalem as the capital of Israel.
All right, we cannot underscore how important this decision is for the Middle East. While Israeli Prime Minister Benjamin Netanyahu welcomed the move, Palestinian Authority President Mahmoud Abbas said that the announcement was tantamount to a U.S. withdrawal from the peace process. World leaders from across the globe have denounced this move and warned of fresh violence in the region. In fact, 8 Security Council nations have demanded an emergency meeting to discuss President Trump's decision. To understand the gravity of the situation and the implications of this move, we're joined this morning by Raj Bhala, professor at the University of Kansas, senior advisor at the Denton's law firm. And Raj, of course, also writes our monthly column On Point. He's been following the developments very closely. Professor Bhala, good morning, or rather good evening to you, because I know it's late night. We appreciate you finding the time to do this. Can you talk us through the implications of this, not just on the Middle East peace process, but what it means for geopolitics across the world?
It's a pleasure. Thank you for having me. Well, first, from India's perspective, India has long enjoyed excellent relations with both Israel and the Arab states across the Middle East. So one challenge now for the Prime Minister and the Foreign Minister is to see what should they do. Should they follow suit with the Trump administration, or perhaps much more likely, should they join the chorus of all other countries, France, Germany, Turkey, China, Russia, the Saudis, Jordan, as well as Pope Francis? All of them have said that this is not a good move and reacted negatively. So from the Indian perspective, given the long-standing good political relations and healthy economic relations, including workers in the Gulf, this issue does matter. Then I think you put your finger on it perfectly, that this raises the question in minds across the world. Can the United States any longer be looked at as an honest broker? It's very interesting if we go back a little bit in the history. In 1947 and 1948 and 1949, the United Nations General Assembly actually passed resolutions declaring that Jerusalem ought to be considered a separate body, basically an international city, because it is the holy home to the 3 Abrahamic faiths, Judaism, Christianity, and Islam. And the United States joined in 2 of those resolutions, saying, yes, it ought to be an international city. In the third one, they said, no, it's not going to be possible given the outcome of the 48-49 war. But since 1949 until perhaps today, the United States has consistently maintained that the final status of Jerusalem, including its boundaries, should be subject to international negotiation.
Well, Professor Bhala, to withdraw from that situation disrupts the Middle Eastern peace process at a time when we've in fact seen festering violence across the Middle East and, several local wars. What do you make of the kind of implications this will have across the world? I know that several leaders have come out and said this might lead to an escalation in violence, and they've also accused the U.S. of quite literally withdrawing from the peace process.
Yes, and that even presumes there is a peace process. Many observers say the peace process basically ended, at least temporarily, in the 1990s, and that the U.S. has basically withdrawn from it and today openly sided with one side. But let me step back and let offer a perspective in which I hope sort of cooler heads might prevail, and that is to view this differently, whether you think of it symbolically or legally. If we look at it symbolically, then the potential for escalation and, God forbid, violence is there. But if we look at it legally, carefully, and we say that the U.S. has not actually drawn boundaries with across Jerusalem, and it is truly left open the possibility of final status talks. If we can try and focus on some of the subtleties, then it's possible that maybe cooler heads will prevail and it won't contribute to an escalation of violence. I would say, though, also, and this takes it back to the symbolic point, and part of the great concern is, in my own opinion, this move it does nothing to enhance America's national security, because it will be looked at symbolically on social media by extremist groups as a tool for recruitment. Why would the U.S. want to give a tool for recruitment, even if it's purely rhetorical and it's not correct legally or factually? Why would the U.S. want to give a tool for recruitment to extremist groups? That's a big question I think the administration has to answer.
I have one quick last question, Professor Bhala. I know that it's impossible to condense in the next 1 minute the complexities of the alignments across the Middle East, but it seems to me that the Saudis have not opposed this vehemently enough, one might say. And so what does that mean if we were to try and draw any conclusion from any kind of realignment in the Middle East of this? Because Iran has obviously been very, very vocal in its opposition to this for the last 48 hours at least.
It's been an open secret that the kingdom, Saudi Arabia, needs Israel or benefits from cooperation with Israel in the fight against extremist groups that the Saudis say are being supported by Iran. So you're absolutely right that the Saudis have both got an interest in supporting the Palestinians and a just resolution at Jerusalem, but also not so alienating the Israelis that cooperation, that budding cooperation, would be in jeopardy.
Professor Bhala, thank you very much for quickly condensing the implications for us this morning. I'm sure that we will have, some comments from you on the BloombergQuint.com website as well, and that is the Middle Eastern situation this morning. I know it isn't something that will influence markets, definitely not in India, but yeah, critical to, what 2018 looks like in the Middle East, and really that will be the top geopolitical concern right now. While it may not have any impact on crude oil prices, as it used to at one time in the past, thanks to U.S. shale, it still is about the security of all our lives.
Yeah, and that in itself, I mean, just purely from a pure markets watcher's perspective, if not an immediate impact, does have an impact at some point of time later on. Geopolitical tensions, we all know how do they go about an impact. But this is not about markets, right? This is something beyond markets and very, very important, as you said.
This is also possibly not about geopolitics. President Trump is suffering his worst ratings ever in the US right now. He is doing what won him the elections, appealing to the right-wing conservatives in the US. You know, and I'm sure if we had more time, we did discuss this with Professor Bhala, but that really is it at this point in time, and that it seems to be the consensus analysis across everything you read across international media for the last 48 hours. So,
but important, and I'm sure a lot of talk and debate on this as well over the course, I'm sure of the course of the weekend, even though we are at Thursday and not Friday really, for the course of the weekend, this will probably be amongst the top stories. But that's all that we have on First Word, at least for the day. But lots lined up on the show. We'll talk about whether the market's correction continues with Andrew Holland of Avendus Capital. GST Law Advisory Committee has recommended a slew of changes. We discussed that with Pratik, Jain of PwC and MS Money of Deloitte. But for now, and of course, we hear out from the management of Cipla all through the day today. So that is something you could stay tuned as well. But for now, full tilt towards the day's trade for the next 1 hour at least. A quick check with the derivative space. Agam Akil is standing by with the FNO setup. Agam, good morning.
Good morning, Neeraj. Well, weakness has persisted, and which means that we have seen further shorts accumulate in futures, the index futures, that is. So when it comes to the Nifty, we're looking at a 5% increase in open interest, while the index itself moves down by 0.7%. And it's the same for the Nifty Bank Index as well. The stock has moved down by as much as 1%, and we've seen about a near 16% addition towards open interest towards fresh shorts. What does this do, and what does this mean for the India Volatility Index? Well, naturally, we'll expect an up move, and now firmly above the mark of 15. This may be a matter of concern for some traders who are long on, say, the next 3 or 4 sessions. But considering the Nifty came off, we also saw the Nifty put-call ratio fall to around 1.1 from around 1.16. Moving in terms of the big changes in open interest, we are looking at the most activity in the 1,100 call. That's where we've seen more writing. And, well, the base continues to form around the 9,800 level in terms of accumulation. Moving in, we have Jain irrigation, which now moves into the FNO band. We'll be watching out for that. And we have some fresh longs building up in Ambuja Cement, where OI went up around nearly 8%. Similarly, fresh longs were also seen in Page Industries, where we did see a rise of around 3.5% in the stock and around 6% addition towards open interest. So we'll be watching out for these. And perhaps a more severe reaction to IRB Infra, which is also in the FNO space. So we'll be watching out for that as well.
Yeah, for sure. Thanks a lot for that, Agam. Though I must say it'll be difficult to ask any of our experts as to how do you trade IRB Infra today. Likely start off with a big bang on the downside. Don't quite know how much, but we'll talk about that. Nevertheless, for now, I'll talk about some of the other assets, other stocks as well. Abhijit, Phatak Johnson with a quick perspective. Abhijit, good morning, and thanks so much for waiting by patiently as well. A couple of days will go on slightly over time. But what is your thought on the index? What is the trade for the day on the index?
Good morning, Neeraj. Nifty has been drifting downwards, but I don't see any momentum in the downside. I mean, there are hardly any stocks which are crashing big time, and in fact, there are a lot of sectors which are still showing some strength. One of them is IT. Cement seems to have bottomed out, and mid-cap IT are looking again attractive. To be specific, Hexaware and Mindtree, with 2 stocks which ran up in the last week, have corrected, and they might be again ripe for a rise now.
Okay, so what's the index strategy for the day today, Abhijit? Would you take any option strategies or future strategies for the next 15 or 20 odd sessions?
Yes, if Nifty futures comes down near 10,030, 10,040, that can be bought with a stop loss below 10,000. It can be carried forward for a few days as long as it doesn't close below 10,000. Or if someone doesn't want to take a risk of that futures, he can buy a 10,200 call. And now the resistance has come down to about 10,100, 120. So if that is crossed and it closes above that, then that position can be carried forward.
What's the idea for the day today, Abhijit? And also, if you can recap, what should an average investor do with BEL? Something that you've been talking about the last couple of days. BEL is still strong. Over the long term, it is definitely strong. Even for the short term, as long as it is above 175, 176, it can still go back towards 185, 190 in December. Over the long term, it is definitely strong. There is no doubt about it. So 175 should be the stop loss for the short term. And your stock idea for the day today, Abhijit?
Yeah, I have Mindtree buy, which, like I said, it has corrected after it went towards 560, 565. So one can buy it near 540 or maybe slightly lower, 538, with a stop loss below 535. And it can go back towards 548 or even 555 in the next couple of days.
Okay, Abhijit, we'll leave it at that. Thanks so much for taking the time out and joining in. We'll watch out for Mindtree as well. But moving on, let's take a quick check at to how the commodity markets are trading at this hour. Pradeep Pandya Johnson with that, and Warren Pradeep. Unlike yesterday, I'm presuming.
Yeah, so not that bad, but if you look at the trend, it has not really reversed. All base metals are trading negative in Shanghai on Wednesday. In fact, the LME base metal index extended decline to the third day. Aluminium was the top loser there, down to 4 months low, losing another 1.5%. This morning, if you look at it, as I mentioned earlier, actually all the base metals are trading negative. Gold prices have also edged lower a bit after dollar gained further against other currencies, and gold is actually hovering near that the 2 months low it has hit earlier this week. In fact, some data release also suggested that global holding of gold-backed ETFs rose by around 9.1 tons. And a lot of flows actually came from Europe, so that's good news, but it doesn't look like it has really affected the trend. India's gold imports, interestingly, nearly halved compared to the last year. If you talk about crude, it has inched up a bit, but that is after significant declines, and the inch up that we see in this early morning trade is because of the US oil inventories that fell. However, the gasoline inventories have gone up, so there are mixed indications, but bounce, a very, very short bounce, I would say, so far, and we'll have to wait and see how the trade really pans out going forward, because WTI has declined around $3 if you look at the trade over last 10 days or so, and the Brent has also fallen by around $2 from the highs. So market discounted the outcome of OPEC meeting in advance, and after that we have been in corrective mode, and there's a marginal bounce of 10 to 15 cents so far.
Well, a quick check on what the world markets are doing at this point of time. Nikkei is up and about, the others lying flattish. Our markets, the SGX Nifty indicating, will start off on a flat note as well. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory, joins us right now on the show. I dare say we'll talk about IRB in a bit with him, because that will arguably remain the big talking point of the session today. But Mr. Chokkalingam, I want to start off with what's happening to banks. Post policy, a big sell-off in Nifty Bank, PSU banks corrected as well. What is your stance there?
Yeah, a bit surprised to see the fall, because majority of us were not expecting any rate fall. My firm view is that the rate cycle has bottomed out in India. Even in the next 6 months, to expect a rate fall is unreasonable, because world over the interest rate and the inflation rates are rising. In India also, Kharif and Rabi crop, the cultivation marginally down as compared to last year, and edible oil import bill is up, oil prices up. So it is not reasonable to expect any monetary easing. On the contrary, things are improving for banking sector. That's my firm view. We already seen in September quarter the NPA cycle slowly getting peaked out for some banks, if not for the entire industry. Even the banking credit growth has inched up. It went down below 6% year-on-year growth. Now it has come back to around 8 to 9% growth. So therefore, I believe that the worst seems to be getting over, not for all banks, but select banks which managed NPA relatively better. So therefore, we continue to buy some of the good quality banking stocks.
Okay, stay on, Mr. Chokkalingam. So much more to talk about. But as I said, a bunch of stocks in news, some brokerage notes as well, and our research team is here, full strength to talk about all of those and more. Darshan, Shraddha and Nikki with all the top newsmakers and stocks that you need to watch out for. I dare say it can't get bigger, probably, to my mind, than IRB Infra today. Let's start off with that one first.
So we all know that the charge sheet, CBI has filed a charge sheet against IRB Infra subsidiary and the promoters, and the case relates to a preliminary view of the charge sheet. Says that it's the company's attempt for conspiracy and an attempt to cheat for land parcel which belongs to MSRDC or the government. Now the company has said that it has cooperated with authorities and will seek remedial course of action for this kind of development and is abiding by the law of land. And as this development is not expected to have any material development according to the management. Now, to give you a little background, the case detail goes back to 2007 when the land parcels were acquired. The company additionally acquired this 5% of land which wrongfully belonged, which actually belonged to government. But then back then, when it realized that it has taken the land which actually belongs to government, it has returned back that land, and the money has been deposited back in the company's account. However, the company investigation has been launched for wrongfully acquisition of this 5% land, which the company has never taken a possession for. The amount for this 5% land aggregates to the worth of around 6 odd crore. And MK says that with this development, there are two positive bits to it. A, it says that the investigation is over, which means that the charge sheet is filed, which means that the investigation would now be over for the company. And it says that the company will file a discharge sheet against the development which has taken place, and it expects the stock to remain under pressure. Now, HSBC also says a similar thing, and it also adds that historically, whenever this has happened, the stock has corrected nearly 30% back in May 2012. Also, if you see in the last, only in the previous trading session, we saw that the stock recovered by 0.4%, but then otherwise the stock has corrected almost 11 odd % in the last 5 trading sessions for that matter.
Yeah, so it's a weak stock, but that's not to say that the market was preempting this. Today's reaction will be in lieu of this news that has come out, and we've seen historical reactions from IRB as well. Again, standard disclaimer, that's not to say that we are saying that that's the same thing that will happen this time around as well. What about the other stocks in news?
Just want to flag off a news development on Infosys, though it might not really see a stock price impact. Now, Infosys has said that they filed a settlement plea with SEBI, and this is with respect to the ex-CFO severance pay. They've said that the settlement plea was neither an admission of guilt nor a denial. However, Infosys has not disclosed what it has proposed in the settlement application. But quickly, some other stocks, Hudson Agro, which has approved a rights issue of about 900 crores. You will get the issue price, issue details, entitlement ratio later on. IDBI Bank, which the board has approved a stake sale of 7% in NSTL. And you have Claris Life Sciences, where the board said that they have found delisting as the best option for shareholders, despite considering cash distribution as an option as well. And just 2 sets of numbers that came after market hours yesterday. Pokana, weak set of numbers coming in there. Revenues fell 9% and net profit fell 37%. Margins took a big hit of about 600 to 700 basis points. Decent set of numbers coming in from Arshia Limited. Revenues grew 11%. Operational level performance was also good, with EBITDA margins coming in about 100 basis higher at 67.9%, and net loss remains steady at about 22 crores or so, Neeraj.
Okay, so watch out for these. Maybe Shraddha's right. Infosys, a material development. Don't quite know if it will evoke a stock reaction. But will PSU banks evoke some reactions on Credit Suisse note? I mean, does the note speak about that? I think it's a market strategy.
Yeah, it's a market strategy, and it talks about, it's Nilkan Mishra's note. And basically, they talk about the fact that, the structural reforms that have happened have actually gone ahead and weakened the near-term visibility on most macroeconomic parameters. What they're saying is that the weak agricultural income may suppress broad-based consumption demand. But globally, there seems to be a lot of support that is coming in. So he's saying for the first time in the last decade, estimates are no longer being revised downwards at this point of time. The market as a whole is not expensive on a relative basis, according to Nilkan Mishra, and they could still see a double-digit EPS growth in FY19. The overweight sectors that they like at this, they are overweight on sectors like energy, material, PSU banks and IT. They are underweight on NBFC, cement, discretionary and staple. So the stocks that they have given, the top outperformers they believe could be SBI, ONGC and Tata Steel, and Bajaj Finance, Ultratech and Dr. Reddy's are the top underperformers according to Credit Suisse.
Watch out for all of these. Thanks a lot. Mr. Chokkalingam, can't not talk about IRB Infra. If you were not a shareholder and if the stock were to open lower, say by 5 odd %, what would you do?
I would still sell it, because if you look at the balance sheet, it is sitting on more than 30,000 crore of debt and liabilities. Even after netting out the cash, it is around 29,000 crore. So historically, even the recent time we have seen, any company comes across such a stress in terms of management pressure or balance sheet pressure or business pressure, the ability to withstand this crisis is very least. So if balance sheet was very strong, then I would not bother. I would wait for the final outcome. but I would sell even if it is 5% loss.
Okay, so Mr. Chokkalingam would like to exit this stock even at declines if it opens with a gap down. Sameet Chauhan of Angel Broking is joining us now. Sameet, we'll talk about your strategies, but IRB Infra is the stock in focus. Do you see any significant support nearby?
There's a support around 200, 195, but as you've already highlighted that it is likely to open down with a decent gap. So if it opens below 200 and sustains below that, we could see further selling pressure. So 200 is a make or break level. If it manages to hold this level at least for a day, then we could see a decent bounce back toward 210, 215.
Okay, so holding 200 level would be really important. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, also joining in. Chandan, first of all, your call on Nifty and Bank Nifty after yesterday's decline and in fact a consistent sell-off that we have seen over the last few sessions.
Yeah, very good morning. Both the indices are continuously making lower lows, lower highs on the daily chart from last 6 consecutive trading session. And support and resistance both are shifting on the lower side, or in fact the put option band is also shifting on the lower side. Market has broken the all immediate support zone and also holding below immediate previous support of 10,094. So till it remains below 10,094, we are expecting it to test the psychological 10,000 to 99.80 kind of level. We have seen jump in the volatility and that is continuously moving upwards. That's up by around 15 to 17% in last couple of weeks. So the rising volatility with falling put call ratio indicates that bearish bias may continue. If market negates its formation of lower highs, lower lows, then only some short sign of reversal could be there. But as of now, I'll be with the trend. I'll suggest to sell Nifty on bounce with a stop loss of 10,094 and expecting it to go towards 99.80 kind of level. And similar kind of scenario can be seen in the Bank Nifty. That is down by around 1.35% in this entire week and trading 400-500 points lower than its weekly volume weighted average. We have seen earlier the maximum put open interest was at 25,000 in the weekly contract that shifted to 24,500 and fresh call writing is happening at 25,200. So now 25,200 is likely to act as a support, while on the downside it can slip to 24,750 to 24,500 zone.
Okay, so that's the call on Nifty and Bank Nifty. Sameet, what are your top stock ideas this morning?
We have been quite cautious on the market, and we would continue to see, some kind of weakness in the market. The kind of structure that we are seeing, any bounce back towards 10,100, 10,150 would be a very good selling opportunity. We would see index slipping below 10,000 quite soon. So we would continue with our conscious stance. The sell call that we had taken last week around 10,350, 10,380. We have first call would be on the sell side, that is Container Corp. Looks weak. In last 2 days, the stock has managed to give a decent recovery, but 1295, 1300 seems to be a very strong resistance. And from here on, we could see a decent correction toward 1244. One can keep a stop loss somewhere around 1320. Other sell call would be on Voltas. This stock has been correcting since last 3-4 days. And yesterday we saw the stock closing below its important support level of 600. So we would see extension of this corrective move towards 580. It can be sold on any decent bounce back. One can keep a stop loss somewhere around 612. And our solitary sell buy call would be on Brokerage Consumer. The stock has been outperforming. During yesterday's session, it has managed to give a decisive breakout from its condition zone. So looks quite good, and we would believe that the stock is heading towards 1041, which would be a near-term target. It can be bought with a stop loss of 979.
Okay. What about your stock recommendations, Chandan?
Yes, I have a mixed trade. Selective mid-cap are doing well. Selective FMCG counters are holding the gains. So selected accordingly. First trade is buy on Hindustan Unilever. It is respecting to its multiple support zone from last 4 weeks and holding well above 1270 kind of level. It has surpassed immediate hurdle of 1275 and holding about 1280-82 can take it to new high territory. So recommending to buy with a stop loss of 1255 for an up move towards 1315 level. Second trade is the PC Jewelers. We have quite positive on the counter from last couple of weeks. And stock has really done well, and it has not seen any kind of major decline even after the market pressure of 300-400 points. So expecting the next leg of rally in the counter as it's given the consolidation breakout and holding the support zone. So recommending to buy with a stop loss of 390 and looking for an upside target towards 420 and then higher levels. Last trade I'm recommending on the sell side, that is sell on the Hero Moto. The stock has completed its negative price pattern, making lower top, lower bottom formation. We have seen fresh call writing with built up of short position, so that can continue to take it on lower side. One can sell with a stop loss of 3600, and the stock has potential to go down below 3350 zone.
Okay, thanks a lot for that. So those are three ideas, and we'll of course ask our experts for the top ideas a bit later on as well. But right now it's 8:50, so that time of the show wherein we get you Bloomberg Edge, our very special segment where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. In today's session, I think it's Bank of India. Jayesh, what is the terminal indicator indicating about Bank of India?
Morning, Neeraj. So I'm watching out for one pattern and one indicator on the chart of Bank of India. The pattern that we are referring to is candle sessions. Now, candle sessions is a Japanese counting technology which uses the numbers from 1 to 13, and potential reversals actually occur at the candle number 8, 10 or 13. And as of day before yesterday, candle session number 9 was actually recorded on the downside, which indicates that we could see a reversal in the coming days. The other indicator that I was referring to is the stochastic indicator, which has actually given you an early buy signal. Now, first let's have a look at what the stochastic actually does. Well, it helps you to identify when a price move is actually overextended, and it also helps you to measure where the current close is in relation to the recent high or the low that the stock has actually clocked. A few conditions that you have to keep in mind: overbought is above 80 and oversold is below 20. So these two conditions you have to keep in mind. And also the two lines which get plotted, a crossover between the two lines gives you a sense of buy or sell depending on the direction of the crossover. Now, that's the chart of Bank of India, and the bottom panel shows you the stochastic indicator. The top panel, this 9 number that I was referring to, you can see that there has been session number 9, which means that you could see a potential reversal from these levels upwards. The bottom panel shows the stochastic indicator, which is the blue line is the stochastic indicator, and it has actually crossed above the white line. However, this is an early signal. You have to wait and watch till both of these lines actually cross above the green line.
So stock is extremely oversold and there could be a reversal. What are the results from back testing here, Jayesh?
So Pratik, if you had bought all the stochastic indicators that it had generated in the last 1 year, the net result would be in excess of 45%.
Thanks, Jayesh, for the update. So Bank of India is the stock that Bloomberg Terminal has thrown up this morning. Sameet, any views on BOI?
See, we've already seen some kind of underperformance from this stock. The stock has corrected quite sharply, so there could be a possibility of some bounce back. But we don't see this stock, surpassing its hurdle of 190 to 195. So any bounce back, we could see selling pressure coming in at higher level, and we would see, this stock sliding towards 170 to 170, which can be seen as a very strong support zone.
Okay, some other stocks which went down quite strongly yesterday. We're seeing some perceptible weakness in auto components, though I would argue that auto components is not the right take there, because Bosch has had a good run and now it's correcting. So it was amongst the top losers in trade yesterday. But look at what's happened to Eicher Motors, look at what's happened to Hero MotoCorp and some of the other two-wheelers. I think there's a bit of consistent selling that we're seeing in some of these names. Not too large a selling, keep that in mind, but selling nevertheless. Mr. Chokkalingam, any thoughts here? Two-wheeler companies, and I'm putting in an Eicher Motors out there too.
Yeah, you are absolutely right. They have fallen surprisingly post RBI policy. Since they are rate sensitive, they also joined the banking stock. But I think the market punishment was not fair. Even the good quality stocks like M&M, even a relatively better stock like Hero MotoCorp, they also got corrected. I think it is out of panic. Definitely there is a lot of valuation comfort in these two names. As you said, Bosch is, even after the recent fall, it is still trading at a very stretched valuation. So therefore one should stick to stocks like M&M, Hero MotoCorp, even to some extent Maruti if it falls a little bit more. So these are the three large automobile stocks. I am quite confident.
Okay. Chandan, will you hold on to your shorts on Hindalco, Vedanta and Tata Steel?
Yes, weakness is clearly visible in most of the metal counter and fresh call rate is seen. So I'll continue to be with short position by putting the trailing stop loss. First, talking about the Hindalco, it is continuously falling down from immediate hurdle of 270 to 233 and making a low top slow bottom on the weekly chart. So clearly weakness is visible. Those who are holding the position can continue to be with trailing stop loss of 239 kind of level. Vedanta also had seen the gap down opening and also falling down. Most of the metal stocks are witnessing short position. So it can slip towards 275. One can trail with the stop loss near to 289 kind of zone. Tata Steel also has seen the gap down opening and formed a negative price pattern. So here we are looking more weakness. However, it recovered from lows, but overall looking towards 655 kind of zone in next couple of trading sessions.
Some top losers yesterday, aside of course, what happened to the large caps, were Shankara Building Products. I thought Radico Khaitan has had two big cuts now in the last 7 odd days. La Opala went down a bit as well. And Sameet, any thoughts here? I mean, there's just this unusual set of profit booking that came into Shankara because I don't think there was any news there. And Radico Khaitan too has had these two big drawdowns in the last 7 or 8 trading sessions.
See, as far as Shankara Buildcon is concerned, this stock has already given a massive rally from levels of 1400 in such a short span. So obviously some kind of profit booking was quite evident. So yesterday what we saw is it is a clear sign of some kind of profit booking, and it might extend a bit towards 1800, 700, 1700 also. So that seems to be a very strong support, but we would expect the stock to consolidate a bit in a range now. The stock has already given a massive rally, which was followed by some kind of profit booking, and now we would see some kind of time-wise correction. So we expect the stock to consolidate a bit in a range of say 2100 to 1700 at least for a while. As far as Radico Khaitan is concerned, within liquor space, McDowell and Radico has been our preferred pick since last 4-5 months. However, at current level, 290, 300 seems to be a very strong resistance for Radico Khaitan. So we would expect some kind of profit booking happening. It might extend a bit toward 240, 230. But if I have to take a particular call on this stock, say with a medium to long term perspective, then 240 to 220 is a zone that I would be closely watching on, and I would rather advise one to start accumulating this stock once it reaches this important support zone of 240 and 220.
Okay, so those are the significant levels to watch out for. Mr. Chokkalingam, do you track Hudson Agro? The company has cleared a rights issue of 900 crore rupees. I guess the stock would be buzzing today.
Yeah, I used to track. It's a great company, no doubt about it. It has got a solid brand. But as I've been saying, in the last 6 months, a lot of small and mid caps have rallied. So we follow a stock-specific approach in the mid-cap space, and we go for the stocks which are beaten down, good quality, good management, and valuation is not stretched. So therefore, I would not recommend buy, but definitely the right issue, shareholders should apply for the right issue if it is at a steep discount to the market price.
Okay. What else, guys? I think just aside of all the stocks that we've spoken about, and there are some big reactions that we expect into individual names, I think it's also important to take stock of the fact that Reliance Industries has been on a roll ever since it's bounced off that 50-day moving average. Even in a weak or weakish setup, Reliance Industries has been doing rather well. The last 3 or 4 days, the trend has been very, very strong. Chandan, I don't know if you talk about Reliance already, but if you haven't, can it extend the run that it has been showing?
Yes, in fact, we have given BTS to trade and continue to be bullish from last 2 trading sessions, expecting the fresh leg of rally or it can surpass the previous lifetime high beyond 960 zone. It has exactly taken support at 50-day exponential moving average and respecting to its rising trend line on the weekly chart. We have seen fresh put writing with built up of long position. So one can continue to be with long position or aid long position for an up move towards 960 then 1020 kind of levels.
Okay. So that's the advice on Reliance. Lupin would be another stock to track where promoters have been consistently buying. Mr. Chokkalingam, does that mean retail investors should also follow?
Beg your pardon, which name?
Lupin.
Which stock? Yeah. Yes, we have been buying at this level. In fact, we bought at around the 1200 level also, but then when it crashed below 900, we became aggressive, particularly after this recent crack. we started advising almost all our clients to buy. And in fact, personally also, I purchased after the recent crash. So we believe that the worst is over. The main reason is that if you see historically, pharmaceutical industry in India, most plants, barring one or two from Ranbaxy, they got back their US FDA status within 18 months to 24 months. So I do believe that Lupin, being such a large company with known management for the quality, I am sure they would come out of this crisis, and therefore I believe this is a good buy at current price.
Okay, here's what the markets are doing at in the pre-open session. The SGX Nifty, of course, has pointed towards about a 7 or 8 point uptick. I don't think that there'll be too much of a deviation from these levels if indeed the SGX Nifty is to be believed, but IRB Infra should come up on your screen first. Aside of all that's happening to the indices, IRB Infra 10% down. Now remember, this may not necessarily happen. There was some chatter about this. The stock has corrected about 9-10% already before this event. That is not to say that it corrected because of knowledge of this event, but keep in mind that the stock has had a bit of a fall. Let's wait and watch if this is the extent to which IRB falls. It could be more, it could be less, but for now, the pre-open rates, the first rate showing that there is an adverse reaction of about 10% on IRB Infra. Let's wait and watch if this lasts or no. That aside, a couple of other large caps that I want to point out. I think the banking name should come up on the screen. The State Bank of India's PNBs of the world fell quite decisively yesterday, or quite strongly yesterday, not decisively really. But yeah, it's a mixed bag currently. Bajaj Finance is the other one that I want to point out, consistently underperforming now. Credit Suisse now says it's one of their top underperformer ratings really from the large cap space. This stock about 0.5% higher. It tends to surprise most people on the upside. Let's wait and watch if it happens today. And then a clutch of mid caps in news as well. There is a Solar Industries, there is a PI Industries on which there are some brokerage notes. Maybe some of these could be reacting.
So Solar is up, PI is more or less flat, but look at IndianOpen Bank up 6%. Is there a reason for that? I doubt. Wipro up 2.5%. So maybe index will also settle when these two stocks really normalize. United Breweries up 2%, AB Fashion and CRISIL also doing well. On the negative side, you have Jubilant Food, which is down 3%. Bharat Financials is down 3%, and Future Retail 2.5%. PNB Housing Finance also open week this morning. So more stocks that we have been talking about. Let's see what has happened to Hatson Agro after the approval of that rights issue. That stock should come on your screen, is up just 1.5%. Claris Life Sciences, where board has talked about a delisting. Let's see how that stock has reacted. Claris Life Sciences and also maybe IDBI Bank. So Claris Life Sciences is up 20%. IDBI Bank now talking about selling stake in NSDL, which is around 7%, is also likely to open higher marginally by 1% or so.
Well, let's go across to Sameet Sarkar, who joins us with the brokerage calls for the morning.
So on the big brokerages, first we have is Ventura Securities on Solar Industries. Now they have initiated coverage on the stock with a buy rating and a target price of 1537, which suggests a potential upside of 37% over a period of 27 months. Now Solar Industries is a dominant player in the explosive industry, and its revenues is 5 times compared to the nearest competitor. Now it manufactures and exports industrial explosives and defense equipments. Now infrastructure growth and boom in mining sector will boost the demand for explosive, according to the brokerage. This added with opening up of defense sector in India and expansion in international markets are added positives for the stock. On the back of this, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 25%, 27% and 29% over FY17 to FY20. It expects the net debt to equity to be maintained at 0.4 times on the back of healthy operating cash flows going ahead. Also, they are expecting the return on equity and return on capital employed to expand to 21% and 29% by financial year 2020. Second, we have is Credit Suisse on PI Industries. Now they have initiated coverage on the stock with the outperform rating and a target price of 1150, which suggests a potential upside of 20%. Now PI Industries has two businesses, custom synthesis and manufacturing, that is the CSM business, and second is a domestic agrochemical business. Now in the CSM side, it is strongly positioned on the back of its order book, which is over $1 billion US, which also gives a good visibility going forward. And in the CSM business currently, it has around 5% market share globally, which offers the company ample opportunity to grow. And when it comes to the domestic business, focus on the specialty product, it will be a key differentiator according to the brokerage. Now, they are expecting the CSM and agrochemical business revenue to grow at a compounded annual growth rate of 20% and 14% over FY18 to FY20. They're expecting the EPS to grow at a CAGR of 18% over the same period, with better growth from CSM segment from second half of financial year 2018 itself.
Okay, so two interesting mid-cap ideas, and we'll talk about these two with our experts. But moving on to another important update. Iron ore prices are on the upswing over the past few days and are on course for their 5th straight week of gains. Now, the worst hit as a result of this are the steel players. What sort of impact are they facing? Nikki Mirchandani is here with more details. Nikki.
Hi, in the global commodity sell-off that we saw yesterday, all the metal counters for that matter succumbed to selling pressure. So did steel makers, but then steel makers have reason to it. The ongoing price trend that we're looking at currently at iron ore prices, which is a key raw material used for these producers to make steel, that's what impacting the steel stocks. Now, the steel stocks have been falling on this development, and iron ore prices have risen as much as of December 4th, they rose as much as 3.6%, which is a 3-month high level that we're looking at for these prices. Also, iron ore prices are on their way to clock 5th week of gains for that matter. And Shanghai steel prices, which are the underlying commodity prices, they have been correcting. Yesterday, the counter saw a correction of 3.5%. Today itself, also the index has come down by almost 1.5%. Now, if you look at the 10-day trend that we're looking at for the iron ore prices, they have shot up by as much as 17%, whereas your underlying commodity prices, that is the steel prices that I'm talking about, they have just risen by 6% in these past 10 days. The worst hit will be JSW Steel. Now, the stock has clocked its longest losing streak that we've seen right from June 1997 period. It's a 11-day fall that we're looking at for this counter, and the company is worst hit because it has no captive resources. It actually purchases iron ore from the open market, and the companies with mining have their advantage over this company because JSW Vijayanagar plant in Karnataka overall has an annual capacity of around 12 million ton, and it needs around 22 million ton of iron ore each year. So we can understand the impact of this development. If you look at the chart where we're seeing the commodity prices coming down, you would see JSW Steel has almost tanked 10% in the last 11-odd session or 10-odd sessions, whereas Tata Steel, JSPL, SAIL, they have all fallen in the range of around 5 to 7% for that matter.
Thanks a lot for that, Nikki. Mr. Chokkalingam, any thoughts here on the steel players and the cost pressures?
I mean, if JSW corrects, one can definitely look at it. It's a good quality player. As far as iron ore space is concerned, NMDC seems to be looking good. From the peak price also, it has corrected quite significantly. And of course, the only disadvantage is that they have exhausted already a lot of cash in terms of special dividend. Otherwise, it used to be a big play on cash. Now it's only a play on iron ore, whose prices are now very strong. And in fact, there are some reports indicating Chinese steel output expected to improve in the short term. So all this would augur well for NMDC.
Okay, prices have settled now, and if you look at IRB Infra, it's settling at around 201.50. So kind of trying to hold the 200 level that Sameet was talking about. You also have Videocon, which is up around 5%. Merck is up around 4%. This is MERC, Merck Limited I'm talking about, and not Merck Electronics, by the way. Mahindra CIE, Solar Industries, the report that we talked about, Solar is up 3%. Fortis Healthcare is down by around 3%. So these are a few key movers this morning.
Interesting names there. Videocon has been on a roll really the last few days. Keep that in mind. Up 5% today. I think the last 7 days, 8 days, 10 days that you will pull up, Videocon has had a very interesting move. Confess ignorance, but this stock has been on a roll the last few days. Let's get up the 7-day chart of Videocon. There you see. It's been on a roll. Up 38% is Videocon. By the way, Pradeep Pandya, GVK par is 14.5 rupees, down 2.5%. Okay. Gone are those heady days of 18.5. Okay, that's interesting too. But very close to market open. In just moments from now, we'll also tell you all that you need to know But must confess, I think Pradeep is right. It's turning out to be a slightly muted session, both for the large caps and the mid caps. Don't see too much of a move in mid caps. Top loser is IRB, down 4%. Fortis follows suit naturally, so down about 3%. And the top gainer, a sort of Videocon, is Merck that Pradeep was speaking about. And then Mahindra CIE about 3.5%. So you can clearly see that there isn't enough movement in the mid cap end of the market as well. So let's tell you all that you need to know to stay ahead in trade today, 5 minutes before the markets start. IRB Infra is the top draw. The top newsmaker says the CBI has filed a charge sheet in Pimpoli land case. HSBC downgrades the stock, target price of 200. Meanwhile, Macquarie says stock will remain under pressure.
And 3 new initiation notes which have come out. Ventura sees a 37% upside on Solar Industries. Credit Suisse sees a 20% upside on PI Industries. And Nomura sees a 9% upside on BSE.
Fortune Financial Services, Halden Glass, Hotel Leela, Indian Hume Pipe, Jet Airways and Multibase are some of the stocks that are set to report the results today.
Charandeep Singh owned Girik Wealth Advisors, bought 70,000 shares of Wisman Forex in a block deal yesterday. This stock was buzzing. Right now it's up to 2.5% in pre-open.
Circuit limit has been raised to 20% for Bombay Dyeing, HFCL, 63 Moons, GNFC, Shalimar Paints and 8K Miles.
63 Moons, by the way, is down 20% or so. Good results from Arcia and Adore Welding, while Pokerna and Centrum Electronics report weak numbers.
Okay, so some interesting names out there. Now, just before we kickstart trade, Mr. Chokkalingam, one final question to you, at least from my end. One stock in which people can invest fresh money at these levels.
Yeah, I would first time sharing on the media because recently we initiated Nesco. I believe that this will be a solid wealth creator in 2 to 3, 4 years. Sitting on a cash of 500 crore, debt-free company. Trading at 20 PE despite having 500 crore cash and 70 acres of land, which is going to become a cash cow. Already it is. It is setting up for 5th IT Park and it has got an exhibition center. And it has set up a food court, 2 food court through 100% subsidiary. I believe there is a lot more surplus land. So my vision is that in the next 3 to 4 years, all these lands will be used to expand the existing business as well as to get into new service businesses, and that there will be ultimate unlocking potential. So I am pitching this idea to my clients as a multi-bagger idea, advising everybody to buy even 5 to 8% of the portfolio. That is a level of confidence I have.
Okay. So that is the stock. Nesco is the stock that we are talking about, and it's a new multi-bagger idea that Mr. Chokkalingam has just advised. By the way, if you look at some of the stock prices, 63 Moons is down 16%. On the positive side, you have Apex Frozen, which is not at the circuit, interestingly, up 2.5%. And Himachal Futuristic is another stock up around 3%. These are some key movers with good volume in the mid-cap space so far.
Interesting. By the way, just a small pullback actually to what Mr. Chokkalingam was saying. I remember a conversation that the management had with us, Nesco, that come on air and spoken about their belief that their top line and the bottom line, but he spoke about the top line could actually move up by about double in the next 4 years. And the bottom line could move in a proportionate manner as well with the expansion plans coming in. So watch out. And frankly, they have doubled their top line over the last 4 years as well. So there's no saying that the management doesn't have, the company doesn't have a track record. But watch out for this one. Mr. Chokkalingam, appreciate you sharing this idea for the first time in media on Bloomberg Quint as well. But about a minute and a half left for Market Open. Let's get in the top trading calls from our 2 experts. Chandan, to you first. If you had to bet on one stock for the day, which one would that be?
PC Jewelers, looking for target was 420, 425. Recommended already with a stop loss of 390, looking for 3 to 4% movement on immediate basis.
3 to 4% movement on immediate basis on PC Jewelers. That's Chandan Taparia's top call. Sameet, Chavan, your top call for the morning.
Positionally, we continue to remain bearish on the market, but if I have to pick any particular call for the day, then I would certainly go with a long call on Godrej Consumer Products. We continue to believe that the stock is likely to outperform, so we would stick with our target of 1041. It can be bought with a stop loss of 979.
If you could look at the chart of Pokarna Limited, the stock is down around 6% after the results, quoting at around 211 in pre-open. Any significant levels?
See, it has been consolidating since last couple of weeks. Today, with the gap down opening, it would be, breaking its important support level of 220. So if it manages to stay below 220, we could see extension of this corrective move towards 205, 200 also.
Okay, Jain, stay on. We'll take in your opening thoughts post-market open as well. But 20 seconds to go for the markets to start. Remember, on the pre-open session, we'll have had the Nifty and the Sensex show a small bit of an uptick, if you will. The SGX Nifty 2 has moved on a little bit, really, from those levels. And the first rates will come up on your screen this Thursday morning. It promises to be a flattish start. The question mark is whether it will turn out like yet another day wherein we've only flattered to deceive and then gone down. Here's how we've started off. The Sensex 46, the Nifty about 0.25%. The Nifty Bank, which went down quite ferociously yesterday, is bouncing back. So that one is about 85 odd points. So not bad. A start by the banks in today's session. Bring up the mid caps and the small caps and try and see what's happening to the broader end of the spectrum. About 0.25% a piece for both the mid caps and the small caps. So no great changes out there. The heat map. And more green, a fair bit of green really. For a 0.25% move, this is a lot of green on the screen, and which means that there are not enough stocks which are moving around in a big way. The top gainer, GAIL, BPCL, again, all stocks without news. No great moves really on the upside or the downside. So it's a flat day for the large caps for sure. None of the top losers of yesterday's session are bouncing back with too much of gusto. It's only GAIL, which is up about 1.25%. Bring up IRB Infra, that's the top newsmaker, and let's see what's the reaction there of 200. So holding on to that level that Pradeep and Sameet Chavan were talking about, it's not as adverse a reaction as one would have thought earlier, but maybe that 10 or 11% fall that we've had already, some of it is being baked into. Let's wait and watch. Too early to say what will happen to IRB right now. Let's wait and watch what happens. But 15% from the recent highs is what IRB Infra has corrected already. What about some of the other stocks? And some of the top movers of trade yesterday, some of the newsmakers in the session today. These were yesterday's top losers, and Shankara, after falling 15%, is down another 3.5%, so that's interesting. Radico is bouncing back, as is La Opala. These are amongst the top gainers the last few days, corrected yesterday, seeing some bounce back in the session today. But Shankara certainly under a lot of pressure. Some stocks that could react. So Hatson Agro, a 900 crore rights issue, and that stock is up about 3.25%. Then some brokerage reactions or brokerage initiations. Ventura initiated on Solar Industries, target price of 1537. The stock is up 6.5% at 1196. It's an illiquid stock, mind you. Credit Suisse sees a 20% upside on PI Industries. Again, a stock that's rallied a bit. I think from 800 odd all the way to 972. It's been a strong move. Let's see if there is more in store immediately for PI Industries. Last but not the least, just want to mark that ahead of earnings, these 2 or 3 counters and what they are doing today. So Jet Airways, Fortune Financial Services, and Multibase. Multibase is a smaller name, reacting a bit. Jet and Fortune Financial lying absolutely flat. Pradeep, what else are you spotting?
Mahindra CIA, which is up around 5% in early trade today. You also have Videocon up around 5% as well. TVS Electronics has gained around 4%. You also have Hindustan National Glass, a small cap company which has been buzzing for a while, is up around 4% today as well. Saregama has gained around 3%. Texmaco Infra and UFO Movies, these are 2 more stocks to watch out for. Both have gained around 3%. On the other side, you have 63 Moons losing around 16% so far in trade. Pokarna is down 6.5% after that disappointing number. And you also have Future Retail, which is down around 2% in today's trade. So these are some key movers in mid-cap.
Okay, final thoughts from our experts. Sameet, to you first. Anything that stands out? A clutch of mid-cap names moving around as well. Anything that you've spotted?
We had initiated a sell call in Voltas last week, and now today we can see further weakness below its important support level of 598, 599. So we would expect Voltas correcting towards 580, 575. So one can initiate a sell call at current level also. And by entering into a put option, 600 put option is quite active, so one can go long in 600 put option in Voltas.
And anything that you spotted?
Yes, market managed to hold some gain, but we have to understand whether it surpasses 10,094 or not. Crucial level for Bank Nifty would be watched because of the week expiry, and that will be 25,000, and we have seen fresh call writing at 25,000. So 10,094 to 10,100 for the Nifty and 25,000 for the Bank Nifty would be the key hurdle on immediate basis. If it moves above the same, then only we can understand that market is now getting some stability. Otherwise, weakness could continue in the market.
Okay, thanks Sameet and Chandan for taking time out for us this morning. Moving on to our very special guest for the day, Andrew Holland, Chief Executive Officer at Avendus Capital Alt Strategies, joins us on the show now. Andrew, good morning. What's your take on market? First of all, we have corrected quite a bit. Where do we go here on?
Well, we've been expecting this correction for some time, so it's probably not a big surprise. I think a lot of the good news globally is out there, and that's probably been reflected in the run-up in markets there as well. But we have the Fed decision coming in the next week or so, and that should increase interest rates there. So markets are looking a bit tired. We could see some profit taking. But I think for India, when investors are looking, particularly foreign investors, we're in that kind of zone where the growth is yet to kind of pick up. We have these elections coming up, which we'll get the decision in a week or so's time. So that could keep the markets in a bit of jitters and with some volatility, which is what we're seeing. So I won't be surprised to see markets kind of head a little bit further down before consolidating maybe under the 10,000 level on Nifty.
So how much reaction do you actually anticipate because of Gujarat election results?
It's usually a 1 or 2 day kind of sentiment impact, because it doesn't really impact the economy, but just gives us a flavour of what the BJP might have to do going forward. But I see it as being more of a short-term kind of sentiment impact rather than a long-term kind of impact, whether positive or negative.
Okay. Andrew, what have you made of what's happening to the rate sensitives? Banks is one, autos is the other. They've been the driving force of sorts. November numbers not all that bad, maybe failed to meet market expectations a little bit. Richly valued, or would you believe that there is more in store? And if so, what pockets within the auto space would you bet on?
So no, we think the auto space. I mean, in certain stocks, we're still bullish on the auto sector. We think consumption will still kind of continue to increase, and that will benefit both two-wheelers and four-wheelers. It's then really looking in between all of those stocks and deciding which ones you think will be either taking more market share through new product launches, or just have the lead, over their competition because of the models that they already have. So, it's pretty simple, in terms of which companies to buy. On the banking sector, after that euphoria of the recapitalization, the RBI kind of yesterday said, we're going to decide who gets the money, and it's going to be based on, whether they think it can be utilized properly. So that kind of probably makes me feel that there's only 3 or 4 banks on the PSU side who's probably going to get recapitalized if they follow that through to the T. So that's not great news for the PSU banks again. But until we get the details of exactly what they're going to do, then we'll probably sit on the sidelines a little bit with PSU banks. But obviously, it's not good news for a lot of these smaller or inefficient banks in the PSU side. It's not it's not going to be Christmas may not come for them so early this time around.
There's a Credit Suisse note today, Andrew, and they believe, and everybody is of course entitled to their opinion, but they believe that some of these highly valued NBFCs could now start underperforming, and maybe some of the well-managed PSUs, not the entire bucket, but maybe the large PSU. They have mentioned the largest PSU bank, naturally so, might actually be an outperformer. Would that be an exceptional mover, SBI, one? And would you believe that some of the expensive, richly valued NBFCs could underperform over the course of the next 6 to 9 or 12 odd months?
See, I think you're always going to get pockets or periods of time when the NBFCs will underperform as the the valuations kind of consolidate. But if I'm correct on what I've just said on the PSU banks, then it's going to be the private banks and the NBFCs which continue to take market share from the PSU banks, and that's really why you're going to see huge amounts of growth. And then obviously with areas like affordable housing and that whole housing market is going to be a good area for both the banks and NBFCs going forward. So I'm really kind of bullish on the overall financial sector, just that there's pockets within it where I think there's more hope than really kind of fundamental reason to buy it, and that's goes back to the PSU bank. So I think there's still a little bit more to be played out in this, but let's see. I think I need to see the fine detail of the recapitalisation to really work that out. But the RBI gave us a good clue yesterday of what they're thinking, and they're thinking only the better managed or well capitalised, or certainly better capitalised than some of them, PSU banks are the only ones there that will see any kind of money given to them going forward.
Well, we just hope that the Department of Financial Services agrees, because RBI also said that the final details will actually come from the government, from the Finance Ministry. But moving on to another story which is kind of unfolding. Commodity prices have corrected quite a bit. Base metal and steel stocks have been falling. Do you think we have seen a significant intermediate top in terms of commodity prices, or this is just a technical correction and opportunity to buy?
I think it's an opportunity to buy, actually, because if again we're correct that global growth will pick up with world GDP kind of growing at maybe towards 4% next year, this is going to be a fillip for both commodity prices and oil prices going forward. So again, you've had a great run, and you're always going to see these kind of periods where prices will correct. In terms of the supply-demand situation, and China, whilst it's done some shutdowns on the steel side, is very small compared to what people were expecting. So you're going to have these times when commodity prices will kind of stabilise or just stabilise at a lower level. But it's something which I think is more positive in terms of being able to buy some of these companies, because you will see a lot of growth in commodity or price of commodities rise next year as global growth really picks up, starting from the US, then Europe, then Japan onwards. So I'm more bullish commodity prices going forward, but in the short term, along with markets, we might just see the first kind of fall in global markets, including commodity prices, since the beginning of the year, actually.
Okay. One last question from mine, Andrew. Pharma, and particularly US exposed pharma, has been beaten down black and blue. Valuations, if indeed earnings were to pick up, are certainly compelling. We've seen some instances of promoter buying coming in large cap pharma at least. What's your stance here? Are you favoring pharma at all? And within pharma, if you are favoring pharma, are you looking only at the domestic players, or are you looking at the US exposed players too?
So with pharma, the only reason we'd be looking to do anything in pharma is if we felt that there was a lot of turmoil in the bond markets globally, which would have the rupee depreciate here, say towards the 67, 68 level. Is a good place to hide. But fundamentally, nothing's changed for pharma. So they're going to continue to be beaten black and blue for a bit longer yet, I'm afraid, because that generic story is going to get more and more difficult in terms of margins. So if I'm going to look at pharma, I'm probably going to look at domestic pharma. But then again, the government is looking at price controls there. So it's not a sector I feel comfortable kind of rushing into yet. Yes, valuations are looking more and more attractive, but it's not compelling. And until it's compelling, then I'll just avoid the sector for the time being.
Do you like some of the stories in, say, logistics or aviation?
No, the aviation story has been one which has done very well and will continue to do well. I mean, you just travel around, you see all the aeroplanes full. So I think that's a great long-term story. But obviously, you've got to to factor in where you think the oil price will be going forward, and how these airlines can manage those costs, because it's a lot different than it was say 3-4 months ago. So there will be times to buy this sector. I think it's probably run up a little bit more than I would want it to see at the moment. So I'm not really participating in that. I think the themes for next year, is really that growth in earnings is coming back, and therefore you've got to identify those sectors where you feel that whilst valuations are high, you could be surprised on the upside, and I'm not sure that airlines is a place where I'm going to be surprised on the upside in terms of earnings.
Fair call, Andrew. We'll leave it at that. Thanks so much for taking the time out and joining us and giving us your thoughts. That's the view from Andrew Holland, Chief Executive Officer at Avendus Capital and Avendus Asset Management. Let me rephrase myself. The markets about 1/3% in the green, not bad. The Nifty Bank not contributing as much. Actually, it's some of the other stocks which are doing the heavy lifting, so to say, in today's session after weakness that we saw in trade yesterday. So banks are out, but GAIL, Tech Mahindra, Bosch, Aurobindo, HPCL, not a single bank or a banking name in the top 5. In fact, top 9 gainers. We don't have a banking name. So that's quite stellar in the session today. And the mid caps too, doing fairly okay. But we slip into a short break currently. Coming up next, we discuss the slew of changes recommended by the GST Law Advisory Committee with Pratik Jain of PwC and MS Money of Deloitte.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Trading at the highest point of the day, the Indian markets back with Indian Open right here on Bloomberg Quint. But let's talk about pharma. A late entrant into the US, Cipla wants to play catch up in the world's largest pharmaceutical market. A lot is riding on the drug makers. 3 big launches lined up over the next 3 to 4 odd months. Speaking to Darshan, the company's global CEO and managing director Umang Vohra says the aim is to get a quarter of Cipla's total sales from the US within the next 3 to 5 years.
We know the number, right? Okay. I mean, we've got our own planning and we know the number and we know what range that number will be. Okay. I would probably say that we believe that the US should at least be 25 to 30% of the company, right, in 3 to 4 years.
25%?
Yeah, 25 to 30% is what our aspiration for the company is in the next 3 to 5 years.
Okay.
And, you know, the company is growing, as is the US, but that's where we want the US market to be.
What about margins? You've said that, you know, at least for the near term, margins will be in and around this level. For this year, you've guided for it'll be sub 20%. But do we see the possibility over the next few years that, again, you might inch back to the 22 to 25% mark?
Okay, so I'm going to say something which may be controversial, right? I think so first of all, we moved from about 14 or 15% back, right? And we've now at a range of about 18 or 19 in this year, broadly, right? And, you know, our endeavor was to reach, we wanted to target where the rest of the industry was, right? So you have, you know, a range of companies operating today in the 24 to 28%, and 1 or 2 are higher than that, right? But broadly, the range was 24 to 28 of margin, and this was by increasing our R&D. So we moved from 15 to 19 by making R&D move from 5 to 8%, right? So I believe that normal of 24 to 28 today, Darshan, for the rest of the industry is possibly somewhere the 22 to 24 range.
Okay.
Right? Because post the US price erosion, etc., I think the industry is looking at a new margin normal. It cannot be the same margin normal that happened earlier. And so if it is 22 to 24, you know, depending on the mix of how quickly the US scales up for us, and what type of price compression we see in the US, I think Cipla will eventually get there, but we are in no hurry. I think if we are even at the 20 to 22 range, we're actually okay from a 2-year, 3-year perspective, because Cipla's ethos was never to be the largest margin contributor in this industry. Its ethos was also to do a lot of good. So, you know, we'll be the first company along with Pfizer to sign up for oncology care in Africa, right? And we've done that. And not all of our business is driven to get margin up to be the best in the industry.
No, it's not being the best, Umang. It is basically, I understand what you say is there's a responsibility towards patient, but for a company, there's also a responsibility towards shareholders.
Correct.
Now, if you're saying that you moved from 15 to 18%, that's a good thing and you've achieved it. But still, it's subpar because I know that some of them have come down. So I'm just asking, if you're saying that 22 to 24% will be the new normal, you're still below that. So when will Cipla reach that level?
So as I said, we're looking at a 2-3 year window to get ourselves there.
And how do you intend to do it?
Well, I think it'll come out of our mix, our growth. It'll come out of complete control on costs, like we're doing to, you know, even this year and the year before. So all of that will contribute to us getting there. But I want to go back to that point. Cipla doesn't believe that the quest of margin growth is superior to the quest for patient safety and quality, right? So in our list of principles, we're very clear that we'll get our margins in the interest and service of patients.
Okay.
Right? Because that is why we were created. We were not created because investors wanted to invest in us. We were created to do well for the society. So we believe that if we do and we play the right game, right, we make sure that we have quality and compliant manufacturing, quality products for patients. We believe that if we reach the 22% range, we're okay as a company, right? I don't think we're going to kill ourselves to say somebody else is 24 and we are 22, right? Okay. That's fine. Now we would have killed ourselves, and we did, if we were 15 and the others were 25.
Okay.
Right? That's not acceptable from either by Cipla's board or from Cipla's ethos, right? That's when the issue of, you know, you have to be responsible to investors come in. But if we are within a distance of 2% we are fine, right? It's okay. So we have moved from 15 to 18, 19 now, and it's likely to, over the next 2 to 3 years, we'll try to take this 18, 19 to about 22 or so, right? And then I think that's where we will settle in.
Okay. Before we move on to the other markets, just my final question on the US markets. You said that most of these new launches that will come out will play out in the fourth quarter. What about the third quarter? How much?
So we'll see 1 month in the third quarter.
So Q3 will be better than Q2 in a way for the US market.
For the US, yes. Yeah, Q3 will be better. Yes.
Well, what about the domestic markets? Now the GST is fully priced in. You've had time to see what exactly is happening on and how this entire scenario has panned out. How do you see the domestic markets moving in the next few quarters for Cipla?
So I think the domestic markets we've said we think we should be recording growths of between 13 to 15% quarter on quarter, right? The quarter 2 growth was a bump, because in quarter 1 you had the destocking, quarter 2 you had some restocking, quarter 3 is really settling in now. So, but we're still looking at 12 to 15% growth for the rest of the year for Cipla.
Okay, what's the pipeline like? Which are the new drugs that we can expect over the next 4 to 6 quarters? How many are probably a para 4 or large opportunities that you're looking at?
In the US?
In the US.
So US, I think we could, see the para 4s are all public domain, right? So there's no point talking about them. We have a fair number of limited competition opportunities, but the thing is, Darshan, this is a moving target. Today I may think it's a limited competition opportunity, and I might think that I might get approved in February, for instance, right? But till February, they might have 3 more who join the fray, right? So then it doesn't become a limited competition. But I'd like to believe that we have a fair number of limited competition launches, and we've guided to this that every quarter we'll see one, right? We had said that in quarter 2 end we'll see one, in quarter 3 we'll see one. Unfortunately, the quarter 2 end moved to quarter 3, we saw 2 in quarter 3, right? So I think we are still guiding to the fact that we are hoping to see as an average 1 per quarter. So we will see 1 launch in quarter 4. We will see 1 more launch in quarter 1. So we have a list of this mapped out for ourselves, and I think that's.
But which are these large products that you're looking at?
So they may not be large in the way we know it, right? So for example, Pulmicort is a $500 million market today, right? But it's only 4 players. So there's a good chance that you can get to 25 plus million, right? Yes. So I think that's the type of target we are after, because from our base, we don't need a 600 million product. Yes. We don't need a 100 million product, right? If you were $1 billion, our worry would be different. We need a 100 million product to create some impact, right? For us, a 30 million product is a big product, right? From where we stand.
So which is the next product that...
so I can't give you a name, but I think there are quite a few in our pipeline, and we're hoping some may be on the institution size, right? Some may be institution size. Some may be in the $200 million mark today with no generic. Right? Now, there could be 3 generics by the time we come in, right? But those are the type of products we're after.
Okay. It's important to ask this question because the scenario is, what are there any pending regulatory issues at any of your plants?
No.
All of them have been cleared?
So we have been audited at Goa in the June time period. We were audited in Indore. Goa was end May, Indore was June, and we were audited in our facilities in Kurkum in March. Now, all these 3 are very big sites for us, and most of these are all US FDA audits, right? There are also MHRA audits that are happening. So we have received EIRs for almost all our inspections. We were audited in Bangalore in our API sites in February, and we've received an EIR for that. We received the EIR for Kurkum, we've received the EIR for Goa. Right? And the Indore one was more inspection limited to a certain product. It wasn't a full GMP inspection. And I think that also we are hopeful of resolving with the FDA.
So right now you're all clear in all
We are all clear.
Entire conversation at 10:30 a.m. right here on Bloomberg Quint Live. Let's now get to the conversation of the week, the month and the year, which is GST. The GST Law Advisory Committee has suggested more than 100 changes to the Goods and Services Tax Act, its implementation and the procedural issues accompanying that. Now, the recommendations have been submitted to the Revenue Secretary on Tuesday, that's last evening, and will be placed before the GST Council, which has the power to either accept or reject these suggestions. Joining us to talk about some of the key suggestions are 2 indirect tax experts, Pratik, Jain, leader of indirect tax at PwC, and MS Mani, partner at Deloitte. And good morning to you, Pratik and Mani. And since there are a large number of recommendations, we'll speed through all of them as quickly as possible. Well, not all, but a few key ones. Let me start first by the, few critical ones. One is, I think, top of the list, reverse charge mechanism should be abolished. Now, it has been deferred, as you put it, till I think the March of next year, right?
Yes.
Should it go altogether, Pratik?
Yes, it should go, because what's happening is when you have a reverse charge, when you buy from unregistered dealers, small players, you have to account for that tax as a purchaser. So as a purchaser, as a company, I'm reluctant to buy from those small businesses, and therefore small businesses are getting out of business, which obviously was not the intention. So if you continue with this provision, then the reluctance to buy from smaller vendors will continue. And therefore, we have also recommended to the government that should be done away with. The fact that it has been deferred to March, that means that government, of course, is contemplating as to what to do. So it should be done away with. It's an additional compliance burden and with no additional benefits.
I don't know if you agree, Mani, but this was supposed to be part of the fundamentals of GST in terms of base widening. You take away this. Are you not hurting the very core of what GST was attempting to do in this economy?
Yeah, so while there is a lot of pressure on people not to go ahead with reverse charge, I would say that it is altering the fundamental architecture, because GST was expected to bring a lot of people into the value chain who were not earlier in the value chain. And this was the matching concept was one way of getting them on, and this was another way of getting them on. I would just add one point, is that what we are talking is only doing away with reverse charge on transactions with unregistered dealers. So while there has been a lot of discussion on doing away with reverse charge altogether, that I don't think is going to happen, because even earlier under service tax we were having reverse charge. All of that has been migrated to GST, and all of them continues.
So if you
there is some amount of reverse charge already.
If you do away with it only for unregistered dealers, who does it stay on for?
It stays on for very large number of other players where there are two categories. One category is where the service providers are many and the service recipients are few. For instance, in case of insurance companies, or in respect of mutual funds. Second category is in respect of those where the government administratively feels a huge burden. So those categories have been there in service tax for a long time, and they have got migrated into GST.
So you expect that those will persist, but
those will continue to persist.
Guys will go off the net?
I don't think they will go off the net. My sense is this has to be calibrated, so we can give it maybe 6 more months. Maybe we can take it after a year, but at some stage this has to come, because we are altering the architecture. The objective is to get more people into the tax net so that the rates come down.
Are we altering the architecture? So this was not the initial design of GST, because initially they said purchase tax will be done away with. What is purchase tax? If you buy from somebody unregistered, then you do pay purchase tax. Now this is a backdoor entry of purchase tax to my mind. So I agree with him that other reverse charge like transportation, etc. would continue. But purchase from unregistered dealer, there's no logic. I mean, you will have a situation where larger businesses will not buy from smaller businesses, which is really not the intention of the law. So I have a slight disagreement on this one. That
we'll agree to disagree. I'm sure the council will be listening to both of you on this, given that you all spend an inordinate amount of time debating the many changes to GST on this. E-way bill should be deferred till 2019, or bring in an alternate method for e-way bills. Critical for the logistics industry. Everything I'm told, and I know, Pratik, we discussed this last time when we were talking about this, is that the transportation or logistics industry is just not equipped logistically, in terms of being able to generate e-way bills, and probably won't be for the next 6 months, year, maybe even 2 years. Should we do away with this altogether? Again, a fundamental aspect of GST.
Yeah. Now, e-way bill is certainly not a fundamental aspect of GST. It is actually going against the grain of GST. Because GST was expected to make movement of goods across states seamless. And if you look at it in a very simple way, when people move from one state to another in India, they don't need a visa, right? When services move across from one state to another, it doesn't require any form. So why is there an artificial restriction in respect of goods when we are saying it's one country? And to a large extent, whatever the e-way bill does, the same purposes are fulfilled by the tax invoice. And the tax invoice is available on an electronic database for any tax authority to see anywhere in the country when the goods move. So why are we adding one more piece to the documentation trail, calling it an e-way bill and making it a control mechanism? Because the worry is not on e-way bill. The worry is the moment we have e-way bill, we have something called check posts, which have given, I would say, the whole country an extremely bad name. And you would be reading a lot of things on, check posts. I mean, just to share with you, we have a very famous check post in Kerala, which is between a place called Coimbatore and Palghat. And on any given day in this checkpost, you will find approximately 2,000 vehicles waiting. If you are driving, you need to budget 1 hour to cross a 1 kilometer stretch. So the intention is to do away with checkposts, altogether, and e-way bill is a mechanism to do that.
Okay, so not just defer, kill is what I think Money is suggesting.
Absolutely.
Don't even consider e-way bill.
I agree with him.
You agree with him on this,
yes,
right?
so I think e-way bill way is not a good idea because
But there was a purpose to suggesting e-way bills, which is for states to be able to keep track of the movement of goods.
But why do we need to keep track? So that logic is also not there. So if goods are moving from Maharashtra to Karnataka, by way of IGST mechanism, you have collected the tax already. Earlier, Karnataka had to track it because, they have to collect tax later. Okay, now there is no difference of rate of tax in two states. So, diversion of trade. So the government logic is that, a lot of people will just move without, with fake invoices, etc. How do we need to keep a check?
They needed a second system of checks.
So there are 2 points to it. One is that you have a large machinery of state governments, which practically don't have anything to do right now. So use them for this. And interception, vehicle interception, intelligence, those are things that you develop.
So random checks,
yes.
not.
And second is that if you have a tax invoice, as Mani said, if you have to have this kind of system, why don't you ask the businesses to put the tax invoice itself onto the portal before the movement happens? So use tax invoice. So let's say the vehicle is stopped. You want to see the veracity of the tax invoice. You check on the system because tax invoice itself has been uploaded. So that you can do rather than having a e-way bill system. So there's not no.
This is something which is redundant and which, to my mind, and I'm very particular on this because this is something which speaks of someone who needs to have control over movement of trucks.
So
on trucks, we should not have any control.
The return of Inspector Raj at the checkpost,
absolutely,
right? Exactly.
Absolutely.
Okay, fine. You all agree on this. Many changes have already been made to the composition scheme, including increasing the threshold, etc. There are some recommendations in this which suggest that interstate transactions should be allowed in the composition scheme and that services should also be allowed to avail of composition scheme. Would you both agree that these changes are necessary? Pratik?
Yes, agreed. So interstate should be allowed because a lot of small players also have a bit of interstate sales. So if I have a small manufacturing in Noida, I might be supplying to Gurgaon and Delhi. So it should be allowed. Services ideally should be extended. The only problem with services is that there is not much value addition. The government will lose a lot of money if it is 1% composition for services, right? Because for goods, you are only taxing 1% on the entire amount. So you're losing on the margin, but you're taxing 1% on the entire amount. For services, if they are brought in, I think it will not be 1% composition. It might be a little higher rate, let's say 5%, 7%. But there is a logic to give this relief from filing, etc., to smaller service providers as well. I mean, saloon and repair guys and all of those guys to avail of this scheme. Idea is that smaller businesses should not be required to do this complex filing. I think that's the whole idea.
Did they not just introduce the last time round the 5 lakh threshold for services? What was that? Was that not including service providers itself?
It was. So as far as composition scheme is concerned, there are 2 fundamental aspects. Yes, services should be included. There is a fear of revenue loss, but I'm sure that can be managed. And possibly one way to do that is to keep a different rate for services. It need not be a 1%. It can be a 2, 3 or a 5%. So it can be, whatever is the rate. But the intention of a composition scheme is clearly to simplify ease of doing business.
Correct.
Now that is the objective.
For the small guy
for the small guys who doesn't want.
Yeah,
the second point is this concept again of interstate that we are, discussing at length in terms of should it be allowed, disallowed. I would say the fundamental reason, there is no reason for it not to be allowed. If we are saying again, India is one country, movement of goods should be seamless, movement of services should be seamless, and people should be seamless. Where is the question of having a scheme where you say that, look, you can do it provided you operate within the periphery of your state. And in that, there is an inherent bias to people who operate in larger states.
Right.
So a person who operates in Maharashtra has a huge geographic area as composition scheme service provider. Whereas a person who operates in a smaller state like a Kerala has got a very small geographic area. Now, the composition limits are same for both states. So there is an inherent bias that gets built in towards people who operate in larger states, on account of which you would be seeing that at a broad level, the number of dealers who have registered for composition are more in states which have a larger geographical area. And the number of others are few. So therefore, the inherent bias towards, movement of goods, and see, that's the reason why I said for long we have had a VAT and a CST. and CST was to regulate interstate movement, VAT was to regulate intrastate movement. I think with GST we should demolish that bias completely.
Otherwise, what is the point of talking about one market, one nation, right?
Absolutely.
The entire philosophy is hurt. There are several recommendations that all go towards one objective, and that is simplification of filing, right? I won't go into each one of them in minutiae because it's really difficult to do that within the given time, but return process should be simplified and rationalized. Form 3B should be continued for at least 1 year. For those of you who don't know, that's the summary form that was introduced to help those who are finding it difficult to do GST Tier 1, 2 and 3. So 3B should be continued for at least 1 year. Classification issues, doing away with the HSN code, and also rectification. I think some data, complexity of data that has to be filled into these forms, has been confounding all taxpayers across the board, except for the large ones who come to you guys. What are the immediate steps that need to be taken for this simplification process?
So I think a lot of things have already been done. So if 3B you extend for a year, 3B is a summary return on a monthly basis. I think the recommendation is that you continue with the invoice matching, but defer it for a year. The only challenge I see there is that as a business, I'll keep claiming credits every month.
But I'm
and
not showing you the proofs.
after 1 year, when I do the reconciliation, and I find that large number of vendors have not complied, then I'll have to return it back along with interest.
Right.
So that from a business perspective, they perhaps need to continue doing on a monthly basis while you do reconciliation as per law only on an annual basis. So I think simplification is good. We still see a lot of data which are required in the forms which are not which are really redundant. HSN is one example. Maybe at a later point in time they might want to introduce that, but not now. So 3B, if it continues for a year till the time other sort of systems are stabilized, I think that'll be a good idea. And while we are on this point, I think there are one or two other things that they have recommended on the tax administration, that don't do a search and raid without a commissioner's approval, etc. I think administration of GST is one aspect which has not been given enough attention to, and if it is not given enough attention next 6-8 months, it could create a bigger problem for the businesses. So I think I particularly like that idea about the tax administration and tightening it and having clear guidelines as to when you can go to the premises and when can you go to the offices, rather than making random inquiry, which have been happening for restaurants and other cases for the last one or 2 months.
Okay. Mani, let me add to that the fact that there's one recommendation here which also says return should be filed quarterly, but tax may be paid monthly. I don't know. I mean, look, I'm looking at this from a non-assessee point of view, and I'm wondering, all I need to know is, are people paying their taxes on time? Are these really the payments they ought to be making? And what is the fiscal position from the government revenue point of view? If we do all of these alterations, is it going to hurt these objectives in any fashion?
It could, but the way I look at it is, the reason why we have a challenge today, the reason why we have a plethora of committees which go into various aspects, is because we have tried to do too many things simultaneously. Right. We have taken a huge amount of food on the plate, which is possibly something much beyond what anyone can digest. And if the same thing has been served as portions over a period of time, it would have made a lot of sense. So 3B that you said, I think even in the first 2 months of GST, there were many of us who were suggesting that, look, let's have 3B for a month. Let 3B settle down. Move to the next phase of 1, 2, 3, which is the matching, which is again very fundamental to GST as a whole. Similarly, inclusion of HSN. Don't do it from day one, give it 6 months to a year, because look, GST is something which is in the nature of a fundamental economic reform. It's going to take time to settle down. It's not going to happen from day one. And we are talking of changing taxpayer habits and business habits overnight, which have developed over the last 60 years. That's not going to happen in 1 month and 6 months. That's going to take a bit of time. So if we have a calibrated approach which says, look, we are going to have 3B for the next 1 year. We'll then start with doing 1, 2, 3. After 6 months of doing 1, 2, 3, once the data starts matching, we will go to the next level of matching, which is at the HSN level. If we have a calibrated approach like this, it would do two things. It would give the government more time to prepare. The software guys who are working for them, GSTN and others, would get more time to prepare. The second is, it would provide a complete roadmap to business. So business knows that GST India reform is a 2-year process. These are the milestones. These are the steps I need to, take over. Now, that is what I think is expected now that these recommendations also are there. We have budget coming in, we have a GST Council meeting in January. So if they can look at making a roadmap for 2 years, instead of having a meeting where rates are...
7 months into the process. 7 months into the process, Mani. Okay,
absolutely.
We're out of time on this show, but I'm going to give you each 30 seconds to wrap this up for me simply on one count. So much continuing change. 7 months into the process. Every week we're discussing alterations to the implementation, to the rates. How are taxpayers supposed to cope with this?
Okay, so the reason why we are doing this on a reactive mode is because we don't have a planned calibrated approach. And the only choice is to be reactive. As far as taxpayers are concerned, all that taxpayers can do right now is to prepare in terms of what is already known, what is expected, and be ready. Until and unless the government comes out with a roadmap over the next 2 years on GST, what's going to happen till 2019, it's going to be very difficult for people to navigate. But they have to navigate, they don't have a choice.
Now, well, what does that mean for the ability of people to pay the right amount of taxes, for the fisc to have some idea of what revenue it's collecting? Pratik, we still have no clue months into the process.
No, I agree. So, but having said that, if the choice is between doing something and doing frequent changes rather than not doing anything, knowing fully well that things are not working on the ground, I would rather make changes, even if it is frequent and more painful, because ultimately it's good. Look, GST is a big structural reform. It is going to take time to settle down. Now, obviously we have not implemented the perfect system. We did not have enough time, and so on and so forth. But I'm encouraged by the fact that the changes are directionally good. So, yes, a bit adventurous life as well. So
adventurous life for the two gentlemen on this table. All the filers are worried a lot on how they're going to cope with continuous changes. Gentlemen, to both of you, thank you very much. That's all we have on Indian Open.
Yeah, I just need to mark, though, that the markets are trading at the day's highs, and aside of 2 stocks, not a single stock in the Nifty in the red. So quite unlike what happened in trade yesterday, and more so post the policy, there's a bit of a sharp reversal that is happening. Not across the board, not across the Asian bourses, but Indian markets in particular doing rather okay. So the FNO show will take forward all of these actions. Make sure your trading queries keep on coming. Thanks so much for watching Indian Open.
Are we live?